What's up, y'all? This is Unko, and today is December 6th. And tonight I'm going to study for an hour and talk about stock for an hour. Since recently I had great opportunity, so I could get to have a lot of free time than before. So uh, I spending more time on doing YouTube live, and that's why mm, I didn't study before, but then I was thinking to myself, why not study? You know, Uh, so talking about stock for an hour and studying for an hour. That's my whole plan. So from 9 o'clock tonight, Korea time, to 10 o'clock, um, I'll be studying, and for the and another hour will be spent on talking about stock. Okay. Mm. hugely popular framework for developmental application. Okay, tonight I'm going to talk about stock again. Last Sunday, I looked through some of the companies I think uh, I should invest in too, and I found multiple companies. Uh, Let me tell you the list of companies. Mm, and just so you know, there's been a huge sell-off because of Omicron. Um, some would say that it's the worst time, and some would think of it as an opportunity because you know people could have a people could think of it as an opportunity to buy valuable stock at low price, right? And then people could possibly sell it at high price, right? So, uh, and stock that I looked into the most was DocuSign. Um, DocuSign went down to 42%. Uh, so it caught my attention the most. Mm. And also, another company that got my attention was uh, Metaport. It went down by 10%. Uh, and let's see what else we have. Mm, Metaport went down by uh, 10%. If I had a lot of money, then I would have invested to DocuSign more because it's such a low price. Mm. Because I have no spare money, uh, I cannot spend more money on investing. But if I had more money, then I would have bought it already. Hmm. Hmm. And let's look through news articles. And what do we have tonight? The Hathaway portfolio, crowded hedge fund positions, new hedge fund holders, most bought by hedge funds. The cannabis stocks followed the list to discover and track the stock of publicly traded companies with exposure to cannabis. Crowded tech hedge fund positions. What else we have? Watch list. Let's go to watch list. Let's go to my portfolio. Portfolio news: Dow Jones futures rises as Tesla leads tech lower increasing market. Dow Jones Nasdaq sat for a lower open as Nvidia Big Tech Y. Nasdaq sat for a lower open as Nvidia Big Tech Y. US stocks Nasdaq sat for lower opens as Nvidia Big Tech Y. Dow Jones Futures rise as Tesla leads tech lower in Grizzly market. Snowflake expect more growth, but valuation risks keep this analyst on the sidelines. Google, Meta dominate as digital propels global advertising growth forecast. Down 20% since earnings. Is Mercado Libre smart buy now? Aslan Pharmaceuticals and IQVIA Biotech enter into a strategic collaboration. Should Invesco Dividend Achievers ETF be on your investing radar? Market sell-off for two top stocks to buy now. 3 reasons why the stock market hates the Omicron variant. Morning brief. Former Lyft CFO Robert joins crypto startup OpenSea. Zacks Industry Outlook highlights Bright Horizons Family Solutions, Laureate Education, Stripe, and Lincoln Education Services. 3 stocks to buy with a $30 trillion metaverse market underway. Salesforce sees hammer chart pattern. Time to buy. DocuSign stock keeps strong. Cathie Wood's ARK bought Friday flop. Rocky Road has since this top analyst to sidelines. Bull of the day Salesforce. Cathie Wood's ARK snapped up DocuSign amid 42% nosedive. Goldman, Morgan Stanley beat to buy into India mapmakers IPO. UMC reports sales for November 2021. Week of bad portfolio news. SoftBank slumps 9%. 10 stocks to buy according to Ian Sims Impacts Management. Investigation notice from encouraging investors in DocuSign in what losses of. Okay, let's read articles one by one. Nasdaq set for lower opens and Nvidia Big Tech Y. The Nasdaq index was set for a lower open on Monday as mega-cap technology firms slipped and shares of Nvidia led declines among major chip makers, while Dow futures were supported by a rise in economy-sensitive stocks. Nvidia Corp slipped 3.6% in pre-market trading, adding to a 4.5% drop on Friday after the U.S. Federal Trade Commission sued to block its more than $80 billion deal to buy British chip technology provider ARM. EU antitrust regulators have temporarily halted their investigation into the takeover deal as they await more information. Peers Qualcomm Inc. and Advanced Micro Devices Inc. and heavyweight growth stocks Microsoft Corp., Google owner Alphabet Inc., Meta Platforms, Amazon.com Inc. fell between 0.5% and 2.1%. On the other hand, Occidental Petroleum up 1.7% led gains among the energy stocks trading oil prices. Wells Fargo was the biggest gainer among big leaders, rising 1.2%. The Omicron variant of the coronavirus has spread to about one-third of U.S. states as of Sunday, Although Dr. Anthony Fauci, the top U.S. infectious disease official, told CNN thus far it does not look like there's a great degree of severity to it. It's nothing serious. It's This article tells us about the ongoing situation and the overall valuation of stock market. So I'm going to skip this article and let's read this one. Snowflake expect more growth, but valuation and risk keep these analysts on the sidelines. Since debuting on the public markets roughly 15 months ago, the conversation around Snowflake has almost entirely revolved around its impressive growth versus unreasonable valuation. It's an argument that appears unlikely to abate following the data warehousing leaders' excellent quarterly reports. Snowflake, boosted by record product revenue of $312.5 million, 110% year-over-year uptick. Snowflake delivered $334.41 million at top line, in the process outpacing the street's call by $28.20 million. The company is seeing strong international growth too, with EMEA, Europe, the Middle East, and Africa revenue jumping by 174%, and the Asia Pacific segment exhibiting a 219% uptick. The Americas still bring in 82% of total revenue, so there's opportunity for future growth there. While the company is not yet profitable, the display resulted in a beat for the bottom line too, with EPS of 0.51 coming in ahead of the estimates by 0.10. Snowflake also avoided the familiar pitfalls of the current environment, raising both the fourth quarter and the full 2022 fiscal year guidance above the consensus estimates. The market stood up to give a round of applause, sending shares higher by 16% in the subsequent session as several analysts lined up to raise their price targets. However, while William Blair's Camille Misak expects Snowflake to deliver strong growth for the near term, the analysts still balk at the valuation of Flake shares now trade at more than 45 times. The street is not factoring in the various downside risks. These include slower growth from accelerating investments in sales and marketing, as well as intense competition from hyperscale cloud providers, legacy vendors, and new market entrants. Okay, Snowflake. I'll be let's look at what this company is. There's an algorithm that I follow, and let's look at Snowflake. It's down by 4.21% today, and 1 year target estimate is 387.03, and now previous close was 360.28. United States, Snowflake.com. Frank Slootman, Chairman and CEO, Press, provides cloud-based data platform In the United States and internationally, the company's platform offers Data Cloud, an ecosystem that enables customers to consolidate data into a single source of truth to drive meaningful business insights, build data-driven applications, and share data. Its platform is used by various organizations of various sizes in a range of industries. The company was formerly known as Snowflake Computing and changed its name to Snowflake Inc. In April 2009, Snowflake Inc. was incorporated in 2012 and is based in Bozeman, Montana. Hmm. Platform solutions, data marketplace partner, service support, resource company, platform overview, data warehouse, data lake, product announcement event, where your data cloud experience begins. Your data cloud experience begins. One platform, many workloads, no data silos. Data engineering, data lake, data warehouse. Access a world of data and services. Join the Data Cloud, a network of thousands of organizations mobilizing data seamlessly across public clouds as data consumers, data providers, and data service providers easily discover and securely share live governed data across your business with your customers and business partners and with any organization that is part of the data cloud. Access a world of data and services. Gain modern data governance and security. Build and drive your business forward with data. Democratize data analytics across your business so users at all levels and with the varying expertise can make data-driven decisions. Create and run modern integrated data applications to best serve your customers, employees, or business partners. Unify your data warehouses, data lakes, and other silo data to comply with data privacy regulations. Connect locally and globally with Snowflake's platform. Unify, integrate, analyze, and share previously siloed data with a near zero management platform that delivers virtually unlimited scale and concurrency. Hmm. Live Data Cloud Demo, HubSpot, a Snowflake gain hours and hours back into their day and save thousands, if not hundreds of thousands of dollars in FT and overhead. So basically, from what I understand, the Snowflake deals with data, and their main goal is to have have their partners successfully do data driven business well, um, and they allow their clients to gain access of data freely, and by helping clients do business freely, they can gain profit. Uh, I might have to look into it more, but what I'm sure is that if what they're trying to do uh, turns into reality, then they can certainly make some money. That I can be positive. 빨리 나가봐. 나가. Where growth but variation risk keep this atlas in sidelines. Enough of Snowflake and and let's go over to the next article. It's written by Reuters, and Google Meta dominate as digital propels global advertising growth forecasts. As digital propels global advertising growth forecasts. The global advertising industry will notch higher growth this year than previously expected, as brands are relying more heavily on search engine and social media companies such as Alphabet Inc.'s Google, Meta Platform Inc. to reach consumers during the pandemic, according to two ad industry forecasts released on Monday. Despite a year marked by worldwide supply chain disruptions that delayed products from reaching shelves, and the user privacy clamped down by Apple Inc. that many feared would disrupt mobile advertising, brands have continued to advertise online as in-store shopping has been slow to return due to the ongoing pandemic. Brands have continued to advertise online. Yes, that's right, because the pandemic is now back in the game, right? Hmm. Uh, as in-store shopping has been slow to return due to the ongoing pandemic. Director of global intelligence advertising firm Zenith, which published an ad expenditure forecast on Monday. New businesses formed during the pandemic needed to advertise to find customers, while others likely maintained ad spending to stay in front of consumers' minds, said Brian Wusser, global president of business intelligence at ad agency GroupM. Forecast global ad spending to grow 22.5% in 2021 from the previous year, while Zenith estimated growth of 15.6%. Both estimates were revised up from previous expectations. Global ad spending is expected to increase by about 9% in 2022, according to reports. The growth has been a boon for Alphabet, Meta, and Amazon.com Inc., major sellers of digital ads, and which now account for more than half of all advertising spending outside of China, an increase from closer to 40% in 2019. It also comes as Alphabet and Meta, the company formerly known as Facebook, both face antitrust investigations in the United States and Europe. The need for marketers to directly reach consumers has also led to the success of retailers like Walmart, Target, and Kroger to rapidly grow their own ad sales businesses, allowing brands to use their shopper data to target more customers. So it mainly talks about advertising in the near future. It expects that uh, online ad industry is still going to be booming industry in the next year, and that its its growth is expected for sure. Uh, in the following year. Hmm. I totally agree with this article because um, the company that I worked at, they also mainly focused on doing advertisement through online platform, and this it's gonna be more happening uh, in the future. So I think the main point that I can get from this article is that if I invest in if I invest money in um an online ad company, then I'll be earning some money. That's the point I can get. Alphabet or what else was there? Hmm. Alphabet. Oh, let's see what we have. Alphabet, Amazon, Alphabet, Amazon. Down 20% since earnings is a Mercado Libre or Smart Buy now, with the stock now down by 20% in the past month. Food.com contributors Matt Frankel and Dane Kaplan take a closer look and the full live video clip recorded on November 18. Matt Franklin. Then I was looking at Mercado Libre's numbers and I'm sitting here scratching my head why the stock is down so much recently. So maybe you could shed a little bit of light on that. Mercado Libre, the Latin American company, just hit a fresh 52-week low. E-commerce and fintech company Mercado Libre plunged after its third quarter earnings report, despite solid numbers throughout the business. With the stock now down by 20% in the past month, Food.com is down by 20%. Essentially flat from where it was. From a stock price perspective, but its business is still running really strong. Just taking a look at the third quarter numbers that came out earlier this month, we got 78.7 million users of the core marketplace product and $7.3 billion in gross merchandise volume. That was up 24% year over year. The marketplace sold 260 million items. Extensive strength in key markets for Mercado Libre, Brazil, and Argentina. That's where a lot of the revenue growth has come from. You're seeing a little bit more in terms of coast pastures in other areas like Mexico. That's huge for a company that's almost unknown among US consumers, but serving such a large portion of the world's population in Latin America, I think that you ignore Mercado Libre's potential at your peril. That's a big part of why I've been a shareholder. Mercado Libre, e-commerce company, one of the biggest e-commerce company in located in Latin America, but still a lot of people it's unknown to people, so not many people buy shares of this company, but and I have to look into this company too. Mm. Let's see what else we have. Top stocks, but market sell-off. Collectively, those events have sparked collectively, a number of factors have Wall Street on edge, and right now, supply chain disruptions and labor shortages are creating headwinds for manufacturers and retailers. The Omicron variant of the coronavirus appears to be spreading quickly, and several countries have already reinstated travel bans. And on Tuesday, Jerome Powell said that the Federal Reserve would consider accelerating the taper of its asset purchase programs. Collectively, those events have sparked sharp sell-offs, particularly in growth stocks. For instance, shares of a Fever International, Fever, and Mercado Libre have fallen 60% and 43% respectively from their all-time highs. Wow, 60% from their all-time highs. However, I think that creates an opportunity for long-term investors. Here's why both stocks are worth buying. Fever International. Okay, I get that. Fever International Fever has become a key player in the gig economy. Its platform is style like a marketplace, connecting buyers with sellers of digital services, and its product catalog lists jobs across 500 categories, spanning verticals like digital marketing, graphics, and design lifestyle. Fever. Gig economy. Is I know this. I uh have an experience of using this company. It's just like freelancer market um, where you can buy talents of people worldwide. You can go into Fever and then look for real talents here. Mm. People with varying talents. Fever also addresses the gig economy more broadly, providing a number of value-added services to its users. For instance, Fever Workspace, a back office platform that helps freelancers with job proposals. Yes, exactly. Invoices and task management. And Fever Learn is a training platform that helps freelancers sharpen their skills. On the flip side, the company lends on artificial intelligence. Wow. To personalize the experience for each buyer, using the data generated by its platform to make relevant recommendations. To say Fever provides a valuable service would be an understatement. In the third quarter, its take rate reached 28.4%, and its spend per active buyer jumped 20% to $234. Company is growing quickly. Wow, it's been growing quickly. As a caveat, Fever is unprofitable on a GAAP basis, but the company generates $6.1 million in free cash flow over the past 12 months, meaning its business can sustain itself. A note, Fiverr's mission to reimagine work has become increasingly relevant. Pandemic-driven business closure displaced millions of workers last year, but the gig economy offered means to replace lost wages or earn supplemental income. Yes, that's right. Freelancers can extra income through this website. Even as for me, I use this platform whenever I'd like to use talents, people who lives on the other side of globe, mm, offered proof that people are evaluating their priorities, looking for more flexible jobs or better work-life balance. Fever, Market Libra. Anyway, Fever is the one that I have to pay attention to. And what else we have? Three reasons why the stock market hates the Omicron variant. Morning brief. Most investors will enter this week confused after battling through another topsy-turvy trading week. Bitcoin nosedived at its worst by 20% over the weekend. Last week, the S&P 500 saw 5 straight losses of at least 1%. Former Lyft CFO Robert joins crypto startup OpenSea. Tech veteran Brian Roberts is joining OpenSea as its first chief financial officer in the latest sign. Web3 startups are attracting not just historic sums of cash, but also serious talent. Web3 startups, okay? Brian Roberts is joining OpenSea. Okay, OpenSea. I voted with my feet. Roberts told Bloomberg following his recent resignation from Lyft Inc., which ended his 7-year run as rideshare company CFO. Roberts said while he loves Lyft, the growth in Web3 companies, and in particular in OpenSea's marketplace for NFTs or non-fungible tokens, made it an easy choice. I haven't been this excited about something in a very long time, he said. It reminds me of 1995 eBay. Roberts, who previously worked in Microsoft Corp. at Walmart Inc., joins the crypto craze along with dozens of other executives who have left long-time positions at tech companies like Facebook and firms like Van Rock during the past year. The influx of expertise comes amid a surge of investment into the industry. Venture investor plowed more than $21 billion into the sector this year through November 30, more than six-fold increase that represents more than that past 10 years combined. Wow. According to research, CB Insights found in 2017 largest marketplaces for non-fungible tokens, unique digital assets authenticated on the blockchain that most notably include sports memorabilia and art collections like the Board A Cup. OpenSea has surged in more than $10 billion in transaction value or gross merchandise value. Okay, OpenSea and Fever. OpenSea, it seems like previous CFO Roberts, uh, the guy who worked at Facebook. Oh no, Microsoft Corp and Walmart. He now joins the crypto craze. So this industry attracts a lot of assets and money. Hmm. He says it even reminds him of 995 eBay. Hmm. Okay, OpenSea, so blockchain company. Blockchain company, Fever, a freelancer company. Okay. Zacks Industry Outlook highlights Bright Horizons Family Solutions, Laureate Education Strategy, Procedo Education. The COVID-19 pandemic has caused a disruption in education services. Mm, 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 mm. Three stocks to buy with a $30 trillion metaverse market on the way. Three stocks to buy with a $30 trillion metaverse market on the way. Three stocks to buy with a $30 trillion metaverse market on the way. Okay. Fortunes will likely be made with the metaverse. Wow, it's strong starting. Key point: Nvidia should be one of the biggest metaverse winners with its Omniverse platform and graphic chips. Meta platform is investing heavily in building the metaverse ecosystem. Unity's goal is that most of the content created for the metaverse will be built with its tools. Fortunes will likely be made with the metaverse. Investing in this stock is a great way to get started. Metaverse presents a huge opportunity, but just how huge, there are varying opinions. The multi-trillion dollar market investment from Morgan Stanley has a more specific estimate of $1 trillion, but venture capitalist Matthew Ball, CEO of Apple, believes metaverse market could be worth up to 15 years. Maybe so. If he is, here are three stocks to buy with a potential $30 trillion metaverse market on the way. Nvidia. In his company's second quarter conference call in August that he's fairly sure the metaverse is going to be a new economy that is larger than our current economy. Should be among the biggest winners in the metaverse. Even if Huang's review is overly optimistic, the company's Omniverse platform is a piece of the metaverse that's already available. Supports 3D simulation design collaboration. Just one part of this virtual platforms has a potential market of $40 billion per year. Although I don't think that Nvidia will capture all of this market, my view is that Omniverse will be a massive commercial success for the company over the next decades and beyond. Sure, Meta Platforms really messed up the FANG stocks with its name change from Facebook. However, count me among those who agree with the company's decision to underscore that its future is tied to the metaverse. Meta Platforms. No company has painted a better picture of what the metaverse could become than Meta. Arguably, no other company will invest as heavily in building the metaverse as Meta either. Unity Software. For the metaverse to truly achieve its potential, NVIDIA's Omniverse and Meta's development efforts won't be enough. Billions of content creators will be required to build out the metaverse. Unity Software aims to be the company that provides those creators the tools they need to make it happen. As of the end of 2020, 71% of the top 1,000 mobile games were developed with Unity's platform. Weta Digital looks like a great step toward that goal. The company already had the tools, the programs needed for building 3D games. Should you invest $1,000 in NVIDIA Corporation right now? Okay. Salesforce sees hammer chart pattern. Time to buy. Salesforce.com. CRM has been struggling lately, but the selling pressure may be coming to an end soon. That is becoming CRM recently saw a hammer chart pattern, which can signal that the stock is nearing bottom. I know hammer chart pattern where the tail is long and head is small, and it signals strong buy, especially when this chart pattern occur in this COVID season. Hmm. DocuSign stock keeps falling. Cathie Wood's ARK bought Friday's flop. Feature Cathie Wood's ARK exchange traded funds purchased nearly 747,000 shares of DocuSign Friday following. The e-signature company steep decline. Osh flashy fund. ARK Innovation ETF bought 461,662 of DocuSign, while the ARK Next Generation Internet ETF bought. Anyway, Cathie Wood's ETF, they bought a huge amount of shares of DocuSign. Hmm. The ARK Fintech Innovation bought. And now enough of reading. In the platform Yahoo Finance, and now I'm gonna go over to Zaxa Investments and MarketBits, and let's see what they have. Mm. Software company Adobe stock has been on a tear blowing through its pre-COVID highs. The creative software developer was a pioneer in cloud computing and software as a service subscription model. It revolutionized software company operating models when it provided its expensive Photoshop software suite at a monthly subscription rate rather than a one-time purchase price. Since then, the company has built out its library of creative software offerings with a robust portfolio segmented in Adobe Creative Cloud, Document Cloud, Experience Cloud, as well as publishing and advertising products. The company continues to score large wins, including Nike, Facebook, and the U.S. Department of Interior. The recent price dive is presenting prudent investors with opportunities pullbacks to gain exposure by scaling in a position patiently. Adobe, okay. Is ready to rock. Uh, Applied materials. Semiconductor stocks have been some of the best performers in 2021, and if the market wants to establish a new leader there, Applied Materials could certainly be one to watch. The company produces semiconductor fabrication equipment, which includes products that are used in deposition, etching, wafer inspection, and more. Wafer fabrication is a process that is absolutely essential in producing semiconductor chips, and the fact that Applied Materials is a leader in manufacturing this type of equipment means that the company's products are in high demand. It's always nice to see a strong backlog for a company, as it can provide insight into what earnings will look like in the coming quarters. Applied Materials. Pfizer, Toll Brothers earning report play for the month of December. Toll Brothers is another stock to watch. It's one of the leading home builders and will release its quarter four and fiscal 2021. Applied Materials. Enough of reading and done talking about stock. And now I'm thinking I should spend more time on analyzing stock rather than just reading an article aloud. But reading article aloud is much more fun. Hmm. But uh, we'll see. Okay. All right. Bye bye and have a good night.